In my mind, I'm gone to Carolina.
Greetings and welcome back to Fisher Wealth Management's Tips of the Week. Once again, I'm Rick Fisher, and I'm the managing partner here at Fisher Wealth Management. And this week's post is on facing volatility. Because I'll tell you, staying focused on long-term goals can be difficult during periods of heightened volatility, such as we've experienced really over the last 6 months, but certainly been heightened in the first part of 2016. Although the list of market concerns has grown, it really remains important to see the full picture and really remain committed to a long-term plan. There are concerns, right? Here at home with lackluster corporate earnings in the fourth quarter of 2015, the Federal Reserve seems intent on pursuing additional interest rate hikes despite a pretty clear message from financial markets that it might be a mistake. Oil prices remain low for some time as we endure the slow process of a real supply adjustment, which really suggests that maybe a few more energy companies are going to go bankrupt in the future. China's growth is also slowing. We think their growth number is closer to 6 to 6.5 instead of 7. However, bright spots remain. The U.S. consumer and the services sector of the economy really remain solid, evidenced by last Friday's strong retail sales report for January 2016. Job gains have been steady and wages are rising. That supports consumer spending and that supports home values. Low gas prices have also helped strengthen, and the strength in the U.S. dollar has not hurt us quite as bad recently. U.S.-based multinational corporations, their earnings continue to improve. We take some comfort in the fundamentals. Corporate profits, they've paused largely because of some of those previous factors, but they're not collapsing by any stretch of the imagination. Excluding the volatile commodity sector, the S&P 500 earnings are on track to rise a very respectable 4% year over year. Overall, earnings are potentially poised to really resume and really accelerate growth in the second half of 2016. And corporate balance sheets remain in excellent shape outside of the energy sector. As disappointing as the start of the year has been, the year-to-date decline for the broader market, as measured by the S&P, is still less than the average maximum decline in any calendar year, or it's also less than the average decline during a positive stock market year. So in the last 40 years, the stock market's gone down 5% or more after the first 6 weeks of the year, 10 other times beside this year. And the only time it went on to have a losing year was in 2008. So we really think a big drop from here would be extremely rare by historical standards. Also, you got to keep in mind the long-term average gain for stocks is a little better than 8%, which includes a ton of ups and downs. It's critical to remember that the best investment opportunities are often at points when fear is at its highest, which is why we look at things like sentiment indicators to identify points where maybe the sellers are just exhausted. This idea was captured well by Warren Buffett, one of the greatest investors of all time, back in 2008, when he said, and I quote, "Be fearful when others are greedy, and be greedy when others are fearful." There's plenty of fear out there right now, suggesting that greed at a time like this may be a more profitable approach. It's really important to continue to monitor a variety of market and economic indicators for signs of a recession, but the odds of that today still remain low. What remains key to managing these market environments is maintaining a long-term perspective, staying diversified, and committed to a well-formulated investment plan. As always, if you have questions or comments or concerns about anything having to do with your financial situation, I encourage you to contact us at Fisher Wealth Management, where we'll sit down with you at no cost or obligation and make sure that you are on track and well positioned for 2016 and beyond. So that's it for this week's post. Once again, I'm Rick Fisher, and please stay tuned for more Fisher Wealth Management Tips of the Week.